imagine what would happen with 20% interest rates today. Just imagine. With it. I mean, we have the biggest, the U.S. government has the biggest adjustable rate mortgage of all time. The national debt is financed with a teaser rate. What if interest rates went to 20%? It would cost the government more than $2 trillion a year to pay the Chinese and the Japanese interest on their treasuries. That's more than we collect in taxes. So, and to say nothing about all the homeowners who would just default on their mortgages and all the banks that would collapse. So, but I don't know how high rates have to go. The only thing I know is the longer we wait to raise them, the higher they have to go. So many hands, I don't even know who to call. I mean, what time is it here? Go ahead.
Regarding coal prices, it seems like you think prices are going to continue to fall. Do you think they'll extend the tax credit business with the FHA and low interest rates?
Yeah, they probably, unfortunately, they probably will extend the tax credits. And, you know, what's going to happen to home prices in nominal terms is always a tough call. Because if they print enough money and make enough credit available, then they can keep a floor under home prices. Even though there's a glut of homes, the prices need to fall. But the real price is going to go down. So if you want to figure out what prices, home prices are in terms of gold or in terms of oil or in terms of any other commodity, they're going to collapse. And the more inflation the government creates to prop up home prices, the more real home prices are going to fall.
If you take the sell, would you sell now or in the spring?
Oh, I don't know. Okay, in the back with the book. Huh? Well, I mean, they're not perfect, right? But the companies that we're buying are producing tremendous profits. They're making products that they're selling, and people are buying.
Honestly,
Yeah, well, they're paying. No. Yeah, we got analysts that fly out there and meet with the companies and see the products and see what they're producing. I mean, sure. Look, there are some pockets of bubbles in the Chinese economy because the economy is not functioning perfectly because of the government manipulation of the RMB. They're printing too much money. They are creating problems, but the problems are being created in order to prop up our economy. Eventually, that is going to end. But beneath the surface, there is an industrial people who are working hard and making stuff and saving money, and you can't deny that. But, all my money isn't in China. I've got money all around the world. I know I can't leave it here. We're a sinking ship, right? So rather than go down with it, I got to find other places to invest. Alternatively, if you don't like any country, then you got to just keep all your money in gold.
Can you explain an ADR and buying an ADR in American dollars? I don't know.
Well, an ADR is our foreign shares that trade on U.S. exchanges in receipts that are issued by banks. And the banks buy the ordinary shares, package them up, and then list a U.S. dollar traded receipt on the New York Stock Exchange or on the Amex. They're fine to buy. I mean, there's nothing, generally, there might not be as much liquidity in those names, and you lose a little bit of the dividends because there are fees associated with the bank sponsoring them. But most of the stocks that we buy for our clients, we're buying the ordinary shares, so we're not buying the receipts that are created by U.S. banks. We're going to the market in Oslo, or the market in Sydney, or the market in Singapore, and we're actually buying the local shares on the local exchanges.
If you have a strong currency, can you have a good exporting?
Of course. I mean, look at the countries. Japan has a huge trade surplus. They have a strong currency. Germany. In fact, we always had a strong currency when we had a trade surplus. It's now that we have a weak currency that we have all these trade deficits. So normally, a vibrant economy, a growing economy, has a strong currency. The fact that our currency is weak and the fact that our currency has to be propped up artificially by foreign central banks shows you how weak our economy really is. Yeah.
Could you elaborate on the strategy of buying gold in terms of foreign currencies, and which foreign currencies you recommend? In other words, buying GLD?
Well, the only way to buy it in terms of a foreign currency is you kind of have to short one currency. Like if you wanted to buy gold in terms of the pound, I guess you could buy gold and short pounds or something. But I just think you don't need to try to figure out. I think that gold is going to go up a lot in U.S. dollars, a lot more so than in Australian dollars or in Swiss francs, because we're going to have more inflation. So you just want to buy gold. We also in Euro Pacific Capital, I'm in the process of setting up Euro Pacific Precious Metals, and I will be selling for delivery the gold and silver that is mined by the Perth Mint. So we'll be actually delivering bars and coins directly to your house if you want to own physical. In the meantime, we sell Perth Mint certificates, which enables you to buy gold and have it stored in Australia for basically for free. It's a great program because if you're worried about the U.S. confiscating gold, it's a lot harder to do that if it's in another country.
Just like the futures market, it's a great strategy.
Well, the futures market, though, they can interfere. I mean, if you've got, and the problem with the futures contract, if there ever is a really big run-up in the price of gold, the other side of the contract might not have the gold to deliver, and it's possible that the exchange could go bankrupt. Now maybe the government will bail them out, but, that is a counterparty risk. There is a problem. Because somebody, if you're long 100 ounces of gold, somebody is short. They probably don't have the gold. And if the price spikes up, they might not have a big enough deposit in their account. They might just say, I can't pay, and now the exchange is on the hook. But what if the exchange, so, if you really want to own gold, you got to own it to make sure that you really have it. Yeah?
Yeah, my question is in regards to investing in China and some of these foreign markets. You've launched this new Euro Pacific Capital Halter Fund. I guess my basic question is, what's unique to Euro Pacific's mutual fund that you couldn't buy through Charles Schwab or one of these others who aren't front-loaded?
Yeah, well, most of the other, we just launched a mutual fund, the Euro Pacific Halter. I partnered up with another company that has a lot of expertise in China to do a fund that's China-focused. But the main difference between my strategy is to focus on China domestic demand. The emergence of the Chinese consumer. So whereas other China funds that are out there, you might see a lot of the bigger export type companies, there's a lot of finance companies. I'm looking more at the companies that are going to benefit from the strengthening RMB and more consumption in China. And I'm also focusing on value and dividends. So it's a little bit different than the approach that some of the other ETFs or some of the other funds would have. But again, it's something, China, it's a one country fund. So obviously it's an aggressive bet on one country, and so there's a prospectus, and so if you're gonna look into that, make sure it's suitable. And the same thing, I'm talking here about investing abroad. There's a lot of risk in everything you do. There's risk in staying in dollars. People have to determine what are the risks they want to take, and then set out a course. Because there are a lot of people. Well, I don't want to risk losing my dollars. Well, fine, but now you're risking your dollars losing value. And I don't even think that's a risk. I think that's a certainty. I'm certain the dollar's going to lose value. So people who are holding treasuries or investments that are traditionally considered safe, I wouldn't touch with a 10-foot pole. But everybody's got to make a decision on their own what they want to do and what risks they're willing to assume. Yeah.
Does that include 401k plans?
Well, it just depends on how you invest it. I mean, all your plans, whether it's your 401k or IRA, what gives it value is the investments that you choose to make. Now, sometimes you don't have the choice. Your choices are limited. And if that's the case, you want to make sure that you try to pick the foreign funds, the resource funds, precious metals. Of course, the other risk is that, one day the government seizes those assets. They increase taxes. I mean, there's all sorts of problems. I think that there is a very strong likelihood, if I'm right on what's going to happen to the dollar, that the U.S. government will impose exchange controls on American citizens. Make it difficult or almost impossible or illegal for Americans to buy foreign currencies, for Americans to buy gold, which is a reason to do it now while it's still legal. Because it's a lot easier for them to say you can't buy more foreign assets than for them to say you need to surrender the foreign assets you already own. That would be an even bigger encroachment on our rights. I'm not saying that it's beyond them. I mean, the government has very little respect for the Constitution, in normal times. I mean, so they have absolutely none when there's a crisis.
So if they do, confiscate gold, how can you cash in your gold from, say, the Perth Mint?
You wouldn't. You would leave it there.
What if you needed something, liquid?
Well, I don't know, but you can't. I mean, it would be illegal to own it. That way, you have to have some in your house, buried in your backyard. But realize that you're a criminal the minute you don't turn it in. But the reason that a lot of these old U.S. coins still circulate is because people didn't turn them in. The Roosevelt confiscated them all. They melted them down. The ones that are still here are the ones that people didn't turn in.